Welcome back to our series on securing funding for your circular economy project. In 20 videos, we'll share some practical insights on how you can increase your chances of raising capital. In our last video, we gave a masterclass on financial modeling. Today, we're diving deeper into how to assess your fundraising needs, evaluate free cash flow, or FCF, and how to use this to appeal to investors. The first step in raising funds is figuring out exactly how much capital your business needs. That means making sure your funding request aligns with your growth trajectory and operational milestones. In other words, that you're asking for the right amount at the right time. So, how do you do that? Well, first, spot cash flow shortfalls. Take a close look at your projected cash flow statement to see where cash outflows are higher than inflows. These shortfalls usually happen during big investment phases like scaling operations, launching new products or services, or making major capital investments. Next, break down your funding needs into categories. Operational expenses cover things like salaries and marketing, while capital expenditures could include facility upgrades or equipment purchases. Working capital is what keeps everything running smoothly. Then align your funding with key milestones. Investors love specifics. Your funding request should match up with major business milestones, things like launching a product, entering a new market, or hitting a key customer acquisition target. For example, a startup in the testing phase might need smaller bridge funding to validate its product before seeking a bigger investment for scaling. And finally, add a buffer. Always plan for the unexpected. A good rule of thumb is to include a contingency buffer of 10 to 20% in your funding ask to cover unforeseen expenses or delays. Now let's talk about free cash flow, or FCF, one of the biggest indicators of your business's financial health and whether you'll be able to pay back investors. FCF is simply how much cash your business has left after covering operating expenses and capital expenditures. Here's how you calculate it. Start with your operating cash flow, then subtract capital expenditures. For example, if your business generates 500,000 euros in operating cash flow and you spend 200,000 euros on equipment upgrades, your FCF would be 300,000 euros. To get a true picture of your liquidity, adjust for financing costs. Subtract things like loan repayments and interest payments to see where your cash really stands. Now, here's where FCF becomes a storytelling tool. Project your FCF over the next 10 years and highlight when it turns positive. This is a key financial milestone, often signaling break-even and self-sustainability. So why does this matter to investors? Well, investors want to see how your FCF improves as your business grows. For example, startups with high initial capital expenditures might show negative FCF in the early years, but if revenues scale and fixed costs stabilize, FCF should turn positive, a strong indicator that the business is on the right track. By clearly mapping out your funding needs and showing how FCF evolves over time, you're not just crunching numbers, you're telling a financial story that can help attract the right investors at the right time. But that's not the end of the story. You should also run scenarios to test how FCF is affected. What happens if there is slower revenue growth, higher costs, or delays in operational milestones? This helps you prepare for potential risks and address investor concerns. You should also outline how funding will be used over time. Investors want to know that you will use the fund efficiently to achieve your milestones. It would be great if you could show that you are on top of your game when it comes to cash flow management. Show them how you optimize payment terms with suppliers or accelerating receivables to enhance liquidity during early stages. So, there you have it. By understanding your funding needs and analyzing free cash flow, you can make a strong case to investors while building a financially sustainable business. Be sure to hit follow or subscribe and check out the guidebook in the description. Stay tuned for the following video on legal and regulatory preparation. See you there.